Hi, in our previous video we've talked about how we can use and incorporate the middle Bollinger Band into our trading style, how we can take advantage of it in order to have a more precise and accurate trade entries. But we haven't talked much about the upper Bollinger Band and the lower Bollinger Band. However, in this video, we'll be looking at the moving averages and our indicator window. The moving average and our indicator window is what we will be considering in this video. Then in the subsequent video, we'll be looking at how we can take advantage of the upper Bollinger Band and the lower Bollinger Band in order for us to have an early entry and also to have a small stop loss, that is buying at a discount and then selling at a premium zone. Alright, so without wasting more time, here is a Bollinger Band. As you all know, this is the setting, and today we are looking at the moving average, and we have two moving average. The period is 10, shift is 0, method is exponential. You apply it to close and then exponential moving average 25. Then we have a relative strength index. So this is the color. You change it to the color of your background. My chart background is white, so my own is white. So if yours is black, kindly change the color to black. Then we have our commodity channel index. So we use our commodity channel index in order for us to determine divergence. So this commodity channel index is basically for determining divergence, while this moving average is an additional tool for you to time your entry. And what does that mean? It simply means that if I want to make my entry, I can also use these moving averages as another method of confirmation. And that implies that I won't be doing that in isolation. Very much important for you to note that I will not be using the moving averages in isolation. What does that mean? I am not saying because the moving average crosses each other, you begin to sell. Neither am I saying that once price just close below the moving average, you begin to sell or you begin to buy. No. What I'm saying is you will be trading it in our method of trading. First, you must be able to determine what is the trend of the market. And once you have determined the trend of your market, you will need your point of interest. So when price comes to your point of interest, you will need to be patient enough for price to close below the moving average. And once that happens, with an additional candlestick confirmation and possibly a divergence, that becomes your entry. Alright, so that is how exactly you can take advantage of this particular strategy. Remember, in this scenario, price has been in an uptrend, and of course we are having a higher low. This is a higher high. This is another higher low, and here we have a higher high. So what happened? Price break this structural point. So here is our break of structure. So this is a BUS. So in this break of structure, price has changed direction. Another way is price successfully closes below our middle Bollinger Band. So we are in a downtrend. And now that price has break structure, which is this zone, this structural point was broken, so we now have a break of structure. What do? We need to identify our point of interest. Remember, we said our point of interest can be our order block. Remember, this is the order block that break our structure. And afterwards, what is the another of? We say we will look forward for a smart money cube, a fair value gap. and here we have a fair value gap. There's a fair value gap here, and you can see how price move behaves. So what is the next? Once price pull into this point of interest that we have marked, we begin to look for additional entry confirmation. So in this scenario, price pull back into this fair value gap. So on the H4, you will realize that we are having a divergence. This is a divergence and this is a divergence. So let's move to our 1 hour time frame where we will be making our entry. Remember, we said that the essence of this is for an additional confirmation. So let's assume we are not using the moving average. You could have had your first entry when price come to your POI, point of interest, and gave you this bearish pin bar. That would have been your sell entry here. You could have sold here, and then your stop loss would have been above this high, and then you see how price drops massively. However, our entry on the 1 hour will give us a smaller lot size. So look at it here. Price already pulled into this zone, okay, and look at this divergence. There is this divergence that happens in that zone, and that is our sell entry. Okay, so if you were here earlier, you would have been in that sell, and you see how price falls to the downside. Now this is how our moving average comes into play. Now that price has come into the point of interest, what do? We want to see price close below the moving average. And in this particular scenario, if you look carefully, you will realize that we have a close of price below this moving average. Do you see that? So this price closed below the moving average from our point of interest. However, when you get this situation and you have this type of closure, if you are an aggressive trader, you can sell at this point when price closes below it. But if you are not an aggressive trader, you are conservative, you want to get a confirmed validation before making your entry, you need to be patient enough for price to close. Let price retest the moving average for the second time. That is always the best way to find this entry. Look at what happened. Price come down, pull back, retest the moving average. After this moving average already crosses each other, price retest the moving average and then give you this bearish engulfing candle. You can see that candle there. Then you can now sell from that zone, and then you see how price move. And if you are observe over time, you realize that this is a bearish flag pattern formation. This formation is very obvious on a lower time frame. Now combined with this moving average, it becomes a double confirmation. That is a confluence, and then you would have been in that trade. So let's look further. Look at it again. After a some while, another time, price pull back again, giving us the same bearish flag pattern. You can see price pull back again into the moving average, and when that happens, you see that closure of these candles below the moving average. That would have been another of your entry. This time your stop loss will be here. So you can see how this has been solely a play around the moving average, and in this scenario too, it plays out again. Price pull back to your moving average. It did not get to the middle Bollinger Band, gave you a candle formation, and this plays out. It pulls back again, give us another bearish pin bar, and then you see how it plays out. So this is applicable across all assets, and this works. You can apply it on anything that has to do with candlestick pattern while you validate using your trading confirmation of the CCI divergence. So look at this here, you realize this is a divergence, so you need to train your eye. You can watch detailed video on this channel on how you can go about it. So this is how you can combine your moving averages and the CCI divergence. So in the subsequent video, I'll be explaining in detail how you can do a premium and buy at a discount using the upper and the middle and the lower Bollinger Band. So thank you so much for watching. Thank you for your support to the channel. Do well to subscribe if you are coming across our video for the first time. Like, share, turn on your notification bell so you'll be the first to get notified when we upload our next video. And of course, you can join our mentorship class. There'll be a link in the description of this video that will take you to a Telegram channel where you can reach out for inquiry on how to be a member of that particular community. Thank you for watching and see you in the subsequent video.